Welcome back to FreightWaves Now. In this week's edition of the Research Corner, I'm senior analyst Tony Mulvey, joined today by Joe Antoshak. Joe, how are you?
I'm doing well, Tony. Thanks again for having me.
No, happy to have you. Got some interesting things today. Going to talk really about what's going on in some macroeconomic data and kind of if the consumer can kind of maintain some, I don't want to say momentum because you've seen the inflationary pressures that they've been facing, but if they can carry it through any positive signs that the consumer can basically carry through until 2023. We'll start here with our first chart of the day, and we're going to pull up the credit utilization. So that revolving credit number, and we'll see it's past where we were pre-pandemic, indicates that consumers are taking on more debt over the past. You see the results of what the stimulus had, and how consumers really paid off a lot of debt, especially this revolving credit card debt, what you would think of as higher interest debt. And what we've seen is just this reversal that, look at the trend lines in comparison to before the pandemic, it was this steady upward movement. Now it's almost like a vertical line with where the consumer's headed.
Yeah, that's exactly right. And at some point, I think it's safe to assume that that's going to have to come to a head, right? We're starting to see some normalization in the job market, right? Last week's job report had plenty of bright spots, but you do see that hiring is slowing down a little bit. You're seeing employees quit at with less frequency. And so as the labor market sort of shifts, I think that you're going to see less disposable income for those employees, those consumers. And you're probably going to see consumers feel a little bit less comfortable taking out, utilizing so much credit, I suppose. And so I think that'll potentially level out here in the not so distant future.
Absolutely. And I think one of the things that we saw both in the stock out and then this morning's daily watch is this kind of shift that you're seeing to private label that the consumer is having. And there were some interesting things inside of that talked about this cash to credit shift. And we're seeing that, right? Look at personal savings rates at 5%. They're among the lowest that they've been in about a decade. So, we're talking back to just after the Great Recession there in 2008. So just out of that. But you think before the pandemic, we were around 7%. Now we're about 5%. So definitely seeing that personal savings rate get eaten into. And I think that's what's going to be kind of interesting to see how that changes over. The credit utilization is important right now. One, because the cost of debt's increasing, right? You've seen the Fed take this hawkish stance against curbing inflation, which the one way to do that is basically kill demand. And then, what those rising interest rates, you don't feel the effects immediately. So you're seeing consumers already have less basically in the bank with that personal savings rate. They're extending their credit, what they're taking on in debt, and the effects of that haven't been felt yet.
Yeah, that's right. And I feel like, a month or two ago, it felt like investors were somewhat split on what they thought the Fed was going to do moving into 2023. And, you've seen it in the last, couple of weeks that, and with Chairman Powell's comments recently that now it seems like it is believed, right, that rates are going to continue being hiked for further than was maybe expected by some investors before. And that's because, economic data has continued being positive. So it's, theoretically, inflation is going to remain high. But it's going to be really interesting to see, consumer-wise, what happens with this data that we're talking about as we sort of move into this next quarter, and you have the end of the year holiday season. I know the Daily Watch mentioned that holiday weekends typically present an opportunity for carriers to push spot rates upward, and that did seem to happen a little bit here with Labor Day. But there are some pretty big questions about what's going to happen through the rest of the month of September. Are spot rates going to stagnate? Are they going to drop? Are they going to rise a little bit? Maybe. Who knows?
Yeah, I think that's one of the questions. We'll pull up one chart here real quick, and it's going to be that employment chart. And you talked about it, right? There were bright spots in the employment report, but I mean, you are starting to see it kind of that slower hiring pace, and I mean, you kind of see it here. But ultimately, labor market is still appearing strong, even though there are some things that are kind of concerning. We'll move quickly on to that next chart. It'll be that spot rate chart that you mentioned that was in the daily watch. You see the uptick there and kind of look back over the past few years. What do rates do? I mean, you're going to expect them to go up there in the fourth quarter, but it's that in-between time period. What happens then?
Yeah, and one of the really interesting things, right? It's like, last year, right around this time, we were talking about rejection rates, above 20% on a national level, right around there. And now our outbound tender reject index is at 5.73%, right? It's lower than 6%. So you're not going to get that upward rate pressure. And without that, it's like what would theoretically push the spot rate higher?
Yep, exactly. Awesome stuff, Joe. Real quick, anything that you're working on that we should be paying attention to?
Yeah, we got a handful of things. The Freight Tech Top 100 is in the midst of being finalized right now, and we'll be releasing those names next week. We've got some interesting stuff happening over on ratings too. We got a new product called WeDrive coming out, looking like next week. And we're still fielding for the broker pay guide. So if you work at a freight brokerage and want to get an upper hand on hiring brokers, reach out to me.
Awesome. Well, thank you, Joe, so much for joining me on this week's edition of the Research Corner. Right now, we'll take a quick break, but we'll be back with more Freight Waves Now.